Money FM 89.3. Best of breakfast. Companies to watch.
Good morning. Lots of companies to watch with all that's going on in the markets. And to help us single out some of the more interesting stories, we've got Dan Koh. Good morning, Dan.
Good morning, Ryan Huang. My goodness, I'm getting a headache from this market movements we're seeing overnight. I can barely catch a break. But welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for your attention. So we're looking at market trends, to risks, as well as hidden gems or warning signs to steer clear of. So be part of the conversation as well, 8855-0893, and tell us whether you think it's going to be hot or not. How are you feeling after last night's pause, Ryan?
Still having a bit of a hangover, trying to catch up with stuff.
Yeah. It's certainly been a whirlwind tour of market movements. Now, we're turning into one of the most affected companies of Trump's tariff announcements, and that's prior to the pause that Trump announced last night. I'm talking about Apple, which stock has been among the biggest movers, and analysts are now weighing in on whether it's a good time to buy, or at least before the pause was made, to buy the dip of Apple, with some sources suggesting that the current declines that we've seen in recent weeks does present a buying opportunity. But let's see how it fares. So we're turning to Apple stock, the iPhone maker, which has witnessed a sharp sell-off in shares, suggesting how investor is just skeptical about its ability to navigate President Donald Trump's tariffs on China, Vietnam, and India, countries that are all critical to the iPhone maker's supply chain. And just before the pause was made by Donald Trump, the shares of Apple have shed more than about 20% in the wake of last week's tariffs announcement, marking its worst 4-day stretch for Apple since 2000, Ryan. And the rout actually erased more than $770 billion in market value from the tech giant and sent a proxy for the stock's volatility skyrocketing as well. In fact, the decline knocked Apple from the top spot by value in the S&P 500 index. That puts it, just second to Microsoft, which is also currently taking the lead, if I'm not wrong. So market strategists has since spoken about the sticky situation that Apple's in, saying that raising prices would hit demand while absorbing costs will hurt earnings and margins. So it is going to be a tough situation for Apple to currently navigate in. And the fact that, the risk became more acute with Monday's threat of an additional 50% levy after China retaliates against previous tariffs with one of their own U.S. imports. That being said, I think there's much to read in terms of how Apple is performing, because after starting the day lower, which has seen, the S&P 500 index just declining for the past few days, we're witnessing, all three indexes soaring above 10%. That comes after Donald Trump just went back and backpedaled on his tariffs policy and just said that, we're going to give a 90-day pause on most countries except for China. And that has given the much-needed reprieve, and we're seeing stocks of Apple just surging 15% overnight to $198.85. But Ryan, it's still down 18% year-to-date. So what do you read from this latest moves?
I think Apple is just a reflection of what's going on in the market, in the sense that it's been going up and down along the tide that it's been moving the rest of the stock market. Also worth noting, Apple, to some degree, has been seen for quite some time as a bit of a safe haven, or defensive play at least, because of its strong fundamentals, its business model, and also its huge cash pile as well. So it has a lot of money, at least, that it can use or maneuver around with. So that's something that's been helping Apple for quite some time. But of course, now with all the changes in the various scenarios, like you mentioned, India, China, and Vietnam, factories could be subject to more tariffs. So that's really going to be something to watch out for. And bear in mind as well, it's just a 90-day pause. So not exactly over in the sense.
Yeah, nothing has been signed in yet. We're looking at about a 3 months wait before, the possibility of another implementation of these tariffs that we're seeing based on Trump's plan. At least as of now, we're not seeing any, analysts or strategists just making changes to their estimates of Apple. But many analysts remain positive on the company's prospects, especially in the wake of the historic sell-off, which the Bank of America said represented an enhanced buying opportunity. Now, Ryan, if you look at it this way, right, most iPhones, Apple's best-selling and important product, are manufactured in China, which is in line for tariffs of about, was it 84% at this stage?
We're looking at 125%.
Yes. 125%, yes. On top of news of them, having faced with over 100% of tariffs, Apple has actually made efforts to diversify away from China, with news report of them exporting more than $23.6 billion in iPhones from India in the last fiscal year. In fact, more recently, the iPhone maker transported 5 planes full of iPhones and other products from India to the US in just 3 days during the final week of March, just ahead of, the impending tariff that was set to be implemented, all of which were made to avoid the new 10% reciprocal tariff imposed by US President Donald Trump. So I guess diversification for Apple is certainly a safe haven to look at for them, and it's certainly playing out well. Gives them enough time within the next 3 months to plan out their next step of approach, would you say?
Yeah, so they've got to figure out their supply chains to be more, resilient to potential shocks, but it's a tough one.
Yeah, but for now, I think I'm going to go with a warm one for Apple, because it does seem like it's a bit hard to make a right judgment as of now. I mean, for TipRanks, Yahoo, and Barron's, they're all giving it a buy rating, but it really ultimately depends on your risk appetite.
Yeah.
What would you say?
I'm looking at The Economist. So they've described Apple as the most exposed American firm in the global trade war. So if you just bear that in mind, this is a potentially very sensitive stock in terms of headline reactions. So definitely one for those with a bit more risk appetite.
That's right. All right, Ryan. Now, that's all we have for today's Stock in Focus, Apple. Now, Ryan, do you know what the first Apple's computer was called?
Lisa.
Huh?
Was it Lisa?
Is it? Did I get it wrong? I don't think so.
Macintosh?
No. Apple I.
Maybe you got it right.
That was released back in 1976. How much do you think it cost back then? 1976.
Must be a pretty penny. $1,000.
$666.66.
What?
Yeah, it's a really odd price tag, but no one has really come up to give a reason as to why it cost that much. But that being said, Ryan, what do you call a person who saw an Apple store getting robbed?
Oh, gosh. Eyewitness.
Hey, very good, right? Wow.
I was thinking iPhones. Yes,
very
eyewitness.
good, very good. Now, how many Apple engineers does it take to change a light bulb?
One, they're pretty smart, right?
None, because they no longer make the socket, Ryan. You just need to buy a new house.
Okay.
It's because they constantly change their products.
That's
but
right.
That was all we have for Apple.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.